I'm Shushan, and in this series, I'll be tracking into hidden parts of Singapore.
Oh my god, treacherous!
To find out what's being done to save our biodiversity.
Every animal plays a significant role.
And if we're running out of time.
It seems that there is an uptrend in number of roadkills.
It's in our nature. Video on demand on CNA.Asia.
Welcome back to Asia First. Investors liking the Hong Kong market debut of JD.com's delivery arm, shares of JD Logistics surging more than 17%. It was up almost as high as 52 Hong Kong dollars in the grey market, but it's just open at that 46.30 a piece now. This IPO was more than 700 times subscribed by retail investors in the city's second largest float this year. Shares were priced at a little more than 40 Hong Kong dollars a piece. That was at the lower end of the expected range. Still, JD Logistics is set to raise more than $3 billion, and that's second to the more than $5 billion raised 3 months ago by video sharing mobile app Kuaishou. With more than 1 million investors bidding, the IPO is reportedly the third most popular one in the city after offerings by Kuaishou and Nongfu Spring. JD Logistics' institutional offer was about 11 times subscribed, but the popularity has far outshone its fundamentals. JD Logistics' first quarter gross profit plunged more than 72% on year to $36 billion, and it's expected to record a significant adjusted loss this year. The company is also facing fierce competition in the express delivery sector as more participants edge into the market. The listing comes at a time when Chinese regulators are tightening regulations on fintech companies and targeting tech giants with stricter anti-monopoly rules. Analysts say investors are now more rational than before as they revalue the shares of such companies. Some say even though regulators have raised the bar for fintech firms, Beijing's support for tech firms continues. Let's check in on markets there as well. The Hong Kong Hang Seng is up 0.33%, helped along by the financial-related stocks and the banking shares. Now, this is in line with what we're seeing in the U.S. overnight, as well as in the Asia-Pacific, with investors focusing on the reopening trades, the reflation trades. So financial-related stocks tend to do quite well in that environment. And on the mainland, it is a subdued picture, so some weakness on the mainland Shanghai Composite. Catherine Yung, Investment Director at Fidelity International, joins us from Hong Kong now. So, Catherine, this JD Logistics listing seems to have brought back that optimism for the Hong Kong IPO market, which has cooled. If we look at from March to May, the number of IPOs that tanked at the first day of trade was like half of the IPOs. Does this increase your optimism for the market?
What we have been seeing over the longer term and what we expect, again, over years to come, is the IPO market in China and Hong Kong is relatively robust when it comes to the pipeline. So if we look at new issuance or proceeds from issuance, last year, if we take the top 5 markets, then the Chinese equities markets were the top 3 out of the top 5. Year to date, top 2 out of the top 5. So this sort of continuation in terms of IPOs is going to be interesting to watch. It really does signal the appetite that domestic Asian investors do have for Chinese equities, generally speaking.
Are you keeping an eye as well on the tensions between the US and China? We had some expectation that with the Biden administration, we wouldn't get the same kind of saber rattling that we saw in the Trump administration. This time around, the Senate seems to be trying to push forward a tech bill aimed directly at China. When it comes to some of these Chinese tech giants, how would Beijing, support them and allow them to bloom, and at the same time, get in control those anti-competitive kind of concerns?
It's definitely a balance in terms of policy and policy implementation. So when we look at the relationship, the trade relationship between the United States and China, because China has made no secret in terms of where it wants to be from a manufacturing perspective, i.e. climbing the value chain, becoming a lot more innovative, becoming more competitive with an economy like the United States. So you have US companies and Chinese companies all trying to gain global market share in terms of their brand. So this relationship is likely to continue over the longer term between the two economies. In terms of the domestic focus, again, when we look at the measures that the Chinese government or regulators have introduced since COVID, it's been very balanced. And in fact, the PBOC is 8 months ahead of the rest of the world in terms of where we're at from a policy perspective, i.e. tightening. So first in, first out again when it comes to China from a policy perspective. Worth noting from a liquidity point of view, and just going back again to the IPOs and the demand we're seeing for capital markets, when you look at the supportive measures that were introduced into China, it was about 6 to 7% of GDP liquidity-wise versus 25 to 30% of the US and European markets. So when we start digesting that 6 versus 25, 30%, when policy changes, i.e. we start seeing a tightening cycle coming through, China's a lot more normalized and in a better position.
You mentioned the central bank. PBOC has come out to say that the exchange rate shouldn't be used as a tool to spur exports or to cushion the higher commodity prices and the import price pressures. What's your outlook for the yuan? What does this mean for China's growth?
Again, when we look at the currency or the FX market, it's very dependent on the direction of the US dollar. From a Chinese perspective, again, that overarching policy view of stability, it also applies to the currency movement. So we're not expecting any drastic moves. Don't forget, when we look at exports last year, they surprised us on the upside from a Chinese perspective. You're probably going to see exports coming down or off their highs from last year as you see other economies reduce the bottlenecks that we did see previously because of COVID. Having said that, though, because we are seeing a recovery, globally speaking, in terms of demand, that's positive for China. But we do have to take into consideration globally the impact of inflation.
Catherine, we're going to leave it there for today, but thank you for your time and your insights. Catherine Yeung of Fidelity International, she joins us from Hong Kong today. That does it for this edition of Asia First. Thank you for your company this morning.
Yeah, we'll be back with more next week. See you then.
Hope to see you on Monday. Bye for now. Have a great weekend.
Look forward to brighter skies. The weather, sponsored by Qatar Airways.
The weather, sponsored by Qatar Airways.
What are the financial forces driving Asia's rise, from transnational business expansions and technology for digital growth to untapped opportunities in the region and beyond? Understand the trends, innovations and corporate deals that are building Asia. On Asia First, Monday mornings on CNA.